This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Chelsea Burns of Escaladora Ventures. Chelsea, thank you for joining us.
Thank you. I'm happy to be here, and happy Earth Day.
Happy Earth Day to you as well. It's that time of year again. So what was your background before investing in early stage companies?
Well, I have been working in the water and energy space for over a decade now. I went to grad school to study natural resources and sustainable development. And there I focused primarily on water sustainability issues. My internship in graduate school was actually at a water agency in Catalonia in Girona, Spain. And it was there that I really started to focus on water infrastructure in particular. I was really fortunate to have a supervisor during that job that was quite forward thinking and saw the need for really understanding the energy consequences of the water supply for the supply that they particularly managed. So he encouraged me to do my analysis with them and to write my thesis on what at the time was becoming a very popular buzzword called the water energy nexus. So I spent about a year and a half working with them, looking at the energy consumption of the water supply for two municipalities. And I was really lucky because since that was such a buzzword at the time and I was sort of at the forefront of that movement, I was invited to speak at a lot of conferences in the US and around the world, actually. And in one of those conferences, I met who is now a strong mentor of mine, and he brought me into his company where I started a consulting career at that point for him. And I was doing a lot of market research on digital water technology issues. And I did that for about a year and a half. And then I was offered a job in Seattle, where I currently live, at a small startup, an energy efficiency startup. And so I moved to Seattle from Boulder, Colorado. And those 4 years in particular were extremely transformative for me. It was my first real experience in the business world. I was getting business experience in the consulting job as I was an independent contractor and I was working with the business development team, but it was a large corporate contract. So this was my first real experience with small business. I was employee number 2, so I wore a lot of hats. My primary role was operations, but as in all startups, you basically do everything. So within that time period, I got really passionate about the startup ecosystem. And I particularly started spending a lot of time looking at different markets in Spain and Latin America, 2 regions that I had lived in my adult life. And I spoke Spanish, and it was just a way for me to connect with those parts of the world that I was really passionate about and missed a lot while I lived here in the US. In 2017, my father passed away, and that completely changed my life. All of a sudden, overnight, I was a landlord, a small business owner. I was hiring accountants, hiring lawyers, managing a lot of wealth that looked very different from my startup salary. So my father, he was a real estate investor, and he had several properties. So overnight, I was managing several tenants, working with the housing authority, with all of the accounting inconsistencies that happened there. And I just had to figure out really quickly how to basically keep my head above water. And I would say the previous year and a half or 2 working at the startup, I was really grateful for all of the skills that I had learned in terms of running operations for small businesses and the business coaching that I was offered in that opportunity. So About a year ago, I had sold a good amount of the properties, and I had decided that I wanted to focus at least somewhat on early stage investing because my true passion lies in entrepreneurship and the startup ecosystem more than real estate investing.
Well, that's great. You have quite a ride there already. And so, what excites you right now?
There are a lot of things that excite me right now. First and foremost, I would say impact investing is what really excites me. And impact investing is such a broad term. So we don't need to go over exactly what impact investing is. But my particular interest within that space is kind of twofold. I like gender lens investing, which also in itself is quite a broad space. And I'm very passionate about climate tech, environment tech, however you want to say it, based on my past professional experience in the water and energy space. It's just what I know. So I focus quite a bit in that space, particularly in terms of gender lens investing. I am really excited about if we want to break it into two kind of levels, I'm first and foremost really excited about helping women and non-binary femmes to think about financial planning, estate planning, and investment. I lead some workshops around Seattle where we bring in speakers and kind of strategize about how we can take control of our finances. One thing or one reason that I'm super passionate and excited about this is because statistics show, unfortunately, that women of my generation are actually regressing in terms of taking control of their own finances. So for me, I find it to be quite concerning, and therefore I am excited to be a leader in this space and try to encourage women, no matter what their wealth status is, to start budgeting and start planning and to start investing. And then women who maybe have some more wealth or are accredited investors, I'm really excited to be a voice for them and help them get on a pathway to potentially start investing in early stage companies where I believe there is tremendous impact available.
Well, that's great. Well, that's great work you're doing there. And so as you work with investors, what's your advice for first-time investors? What do you tell them to do before they write that first check?
Well, I think first and foremost, maybe not even before they're investors, I would just recommend anyone who, especially if you're a woman or a non-binary femme or you're a person of color or any real group of people who have traditionally been marginalized and have not had access to capital, I would say if you find yourself in a position of power and privilege, that you have an incredible opportunity to challenge the status quo and make some big change in either your community or other communities. That's especially relevant for people who come from maybe marginalized communities that don't have access to resources, traditional venture as much. There's a lot of deal flow out there that is being left on the table just because traditional investors don't know about it or aren't tapped into those communities. So if you find yourself in that position where you can start writing checks, I think there is enormous opportunity for you to make a big change. And if you don't know anything about investing, investing in general is pretty intimidating. So the advice that I would give to people is, first of all, really assess what you know. Everyone knows something or is good at something. So for me, it was natural resource management. That's just the stage and the topic area that I knew well. So that, of course, became my focus. But really assess what you know and then get on LinkedIn and really follow it closely. People are talking about whatever subject matter that you're interested in. So being connected on LinkedIn is a great first resource. I think that networking in general is extremely important. And so if you don't know where to start, you should either on LinkedIn or through friends or groups or whatever it might be, you should start building your connections, because that's really where you'll figure these things out. And they're the first place to educate yourself. And there's a lot of resources on there now. One really good resource for me has been Pipeline Angels, and I think we're going to talk about that later. But that's a female, non-binary femme group that's focuses specifically on training women and non-binary femmes to become angels investors with the intention to invest in female and non-binary femme businesses. And they train you how to do that. Other programs I've done are Going BC. There's a number of them that are digital or not digital. So that would be my advice, is to build your network and educate yourself, and then go out there and meet entrepreneurs. If you're going to be investing in early stage companies, you need to understand the needs of entrepreneurs and what they're saying. And so you should go and meet them on LinkedIn and in real life.
Oh, great. And then on the other side of that table, what do you advise a startup to do before they launch that business and start to raise funding?
Yeah, I think if we're going to kind of stay on this topic area of there are groups of people in society that don't have access to capital as much, I think the first step would maybe be to do some research on more diverse either angels or angel groups or VC funds or whatever it may be that are targeting that group of people, because diversity is increasing in the space. And so I think that would be my first recommendation. And then I think all my other recommendations would just be recommendations anyone would give a startup. I think that being good at sales or finding someone who is good at sales is the number one recommendation that you need to be successful. I think that you should also really ask yourself, because the investors are going to ask you this question, why you? So I think you really need to be able to define what is it that's going to make you successful with selling this product or service. Why are you the face of this product and service? Because the investors are going to turn you down if they don't believe that you are. And then I think for my last recommendation is just my own personal experience working in startups. I think that communication and compatibility between the CEO and the COO is super important. The CEO is going to be kind of the visionary, many times the salesperson, and then the COO is going to be the operations person. So you definitely can't have two operations people leading the team, or you won't have any sales. That same thing goes for have two visionaries that don't like to execute on the team, or you won't get anything done. So I think it's super important that you have that balance within your team. And then I think you need to measure everything and constantly be looking at your KPIs and changing your practices based on what the KPIs are telling you.
Well, great. So let's talk about the state of angel investing and how do you see the industry evolving and what changes you see coming up? You mentioned the Pipeline Angels and the work that they're doing there. And let's talk about how that plays into these changes as well.
Yeah, definitely. I think as time goes on, we're seeing more and more diversity coming into the market in terms of people who are writing checks. And I think that's great. And the numbers are still lower than we would like to see. But I think that because there are more, let's just say women, let's just focus on women right now, I guess. And if we're going to talk about Pipeline Angels, we'll talk about women and non-binary femmes. If there's more of them, and there's more of them coming together there and syndicating, they're writing bigger and bigger checks, which is giving more and more opportunity to diverse groups of founders who also traditionally don't have access to capital. So I think that what we're seeing or what we will see as different, more diverse angel groups come into existence, such as Pipeline Angels, we will see a larger pool of candidates. And just to kind of give you a story behind this, I was at a pitch summit, Pipeline Angels, every cohort has a pitch summit. We'll just step back. How Pipeline Angels works is it's a program you go through, and then you're part of the angel group itself. So the first step in the process is you all meet in a city and you are there for a weekend. It's kind of the classroom component. So you're in a group of maybe 50 women from all over the country, and you're all learning about angel investing. And it's a pretty incredible experience. I was definitely the youngest. I'm 32 years old. But the group wasn't tremendously diverse. I was the youngest. I would say the oldest woman was, I can't say, but maybe in their 70s. And I would say half the members in that group at least were women of color. So it's pretty amazing to be in a group of powerful, successful women that is extremely diverse. And there's a lot of value there because the backgrounds of everyone is very different. And then you go back to your prospective hometown. So for me, it was Seattle. And there were 5 women in my Seattle cohort. And we have a pitch day. So we had a list of 30 startups that we wanted to invite to our pitch summit, and 10 of them get selected, narrowed down. So we had about 10 startups pitching to us, all female founded or transgender. And some of the feedback that we had from the group was that the comfort level that the founders found presenting to a room exclusively full of female non-binary femme people was extremely powerful. And they just felt like for the first time that they were really being heard for the person that they were in their business rather than being judged on their gender or their sexual orientation or anything that there might be. So for me as a 32-year-old, I found that to be pretty powerful and surprising because I kind of grew up in a world where I would like to think at least that we've gotten past some of these kind of barriers, but those barriers are very real and people are experiencing them every day. So as a young person in this world, investing world, I hope to be able to be a leader. And since my norm is that I am in a room full of successful women writing checks, I want that to stay my norm here on out.
Well, that's great. Appreciate the description of the Pipeline Angels and the work that they're doing there. I think there's a new generation of angel investors coming up, and love to see more people coming into it to fill those shoes as well. So let's talk about your specific investment thesis and what exactly do you look for in startups that you fund?
Yeah, so as I mentioned, I have 2. So first is kind of more the gender lens with an impact focus, and that's specifically through Pipeline Angels. So through that group, it's mostly female, non-binary females, and I particularly, and many of the women in that group are looking for how impactful to the community is this startup. So that's a pretty important mission. Within my personal investing portfolio outside of the angel group, I primarily focus on climate tech or environment tech. I'm actually most interested in kind of this hybridization between climate and fintech. So just companies that are either one, increasing access to energy efficiency, for example, or companies that are making the processes within the renewable energy world more efficient are companies that excite me.
Well, that's great. Do you have any specific startups that fit that thesis that you can talk about?
I do. I can talk in terms of Pipeline Angels, my Seattle cohort, we invested in a company called LoanSense, which is a startup based out of Michigan, and they're helping with the student debt loan repayment issue. So many people know there's an enormous problem with student debt in this country, and they're trying to assist people with through their algorithms on how to best pay down their debt. And it's actually been pretty interesting because during this crisis, they've had a lot of success with the CARES Act, helping people maneuver or figure out with the CARES Act when they should be paying, how their loan repayments have changed now. So it's been pretty cool to be part of an organization that has been able to take action and actually really help people in the now. And then in terms of climate tech, I am currently finishing the investment process for a company that I've been working with for a long time now. Well, not a long time, but the last year. They're based out of Spain. They're called Fundin, and they are a crowdfunding platform for renewable energy projects. I saw a post about a year ago on LinkedIn by Nacho, who's the founder, and they had recently had a partnership with Ola Luz, which is a retail energy supplier in Spain. And I knew right away when I saw that post, wow, that company has something really cool going for it. And I think they're going to have a lot of success. So I messaged Nacho and we started talking. I always wanted to be an investor in the company, but really what happened was we built a relationship. We started talking. I started helping him edit some pitch decks. He started helping me find lawyers in Spain, and it just became a mutually beneficial relationship. And the topic of investing in the company was not at the forefront. And I think that that's something that I would really recommend to any early stage investors, is that you should be passionate about these companies that you're investing in because you have a lot to offer them and because you're going to be helping them grow as a company, and the relationships that you build over time are super valuable. So yeah, I would say Fundin really pretty much fits in my checkbox perfectly. They are providing ways for ordinary citizens in Spain to invest in renewable energy projects for good returns, and while at the same time increasing access to capital for renewable energy projects that generally don't get funded because they're a bit smaller than traditional investment funds or banks fund.
Well, great. So you see a lot of startups out there. What do you think is the main challenge startups face that you're working with? Aside from fundraising, what do you think is the biggest challenge they come across?
Yeah, I think from what I've heard, user acquisition and retention rate, especially in the crowdfunding space, can be really challenging. So it can be quite expensive to get people to your crowdfunding site, and then it can equally be as expensive to keep them on your site or keep them investing within the platform.
I see. Okay, great. And so you see a lot of different applications and sectors out there. What do you think are some of the top ones that are coming up to pursue?
Well, I think right now with everything happening with COVID, there's a lot of discussion where digital work and all of these things, I'm not privy to those spaces as much, so I don't really focus on them. I think energy is an essential, energy workers are essential. Energy in general is essential. So I think that for me, renewable energy is still a winning ticket. There are still people investing heavily in the energy sector and the renewable energy sector for that. So I think that for me, that's still a very safe bet. And then I would just say that we're at this strange time with COVID, and there are a lot of opportunities out there in local communities, ambitious founders in communities that you wouldn't maybe traditionally think of that are solving real life problems and challenges. So I would just encourage, kind of like I had mentioned before, that keep your eyes open in places that traditionally maybe didn't have access to capital, because there's a big market out there. I think we saw that a lot in the emerging markets with access to banking and how fintech completely has revolutionized that space. And I think that we can see similarities even here with groups of people who have not traditionally had resources or access to certain resources, and then really ambitious people trying to solve those challenges. And there are big markets for those to be tapped into.
They certainly are. So in the last few minutes that we have here, what else should we cover that we haven't?
I think we covered everything. I just want to encourage people to really take control of their personal finances and then really consider investing in early stage companies when that's an option, if that's ever an option to them, because the impact that you can have on a community is enormous. Small businesses are super important. And then I think the last thing that something I'm super interested in is I think there's a lot of discussion, or traditionally there has been this trend in VC that's all about equity and high growth. And as an angel investor, while I am taking bets on certain companies in terms of equity structure, I'm actually very interested in revenue-based financing, debt finance, and kind of more cash flow models. So they're coming, and I see they definitely exist. But as an angel investor, I'm definitely always searching for alternative investments that have cash flow potential, not just always taking equity. And I think that equally goes for founders, that it doesn't have to be this structure where you're offering up equity in exchange for money. There are plenty of ways to be structuring debt works better for you than giving up equity in the company.
Well, that's great. So how best for listeners to get back in touch with you?
My email should be in the show notes. And also you can check out my blog. It's accreditedovernight.com. And that blog specifically highlights how we can think about estate planning, something I'm really passionate about, and also how we as young people can take our new accumulated wealth and make impactful investments with it.
Well, great. We'll add that to the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Great. Thanks so much. Really appreciate it.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.